Hey, this is Jeff Scott, and I thought I'd do a very quick video tonight because I did get a couple calls about what I thought was going on in the market. And so I thought I'd show you some things that are meaningful to me and sort of give you a sense of where my head is at. So I guess coming up with a name, I called it Monday Market Musings, Bear Market Rally, or something more. And it's actually my birthday today, so just got back from dinner and thought I'd do this before I go to bed. As always, it's for educational purposes only. Any recommendations are in the spirit of education, not investment advice. I'm a doctor, not a broker. The tools I demonstrate are what I use, and trading involves risk, and you alone are solely responsible for any investment decision you make. As I've talked about multiple times, what matters to me is market, 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 market. So the question is, was today something meaningful, or is it just a really strong update in an ongoing bear market? I think, just to cut to the chase, I think until proven otherwise and getting more participation like I'm going to show you, I'm going to take the latter, that it's a rally in a bear market. Now, I did hear talking heads on TV saying it's another V-shaped bottom, we're going back to old highs, and that really is possible. But I'm data-driven, and I'm going to show you what the data is showing me. And spoiler alert, it's pretty optimistic. If we take a quick look at the indexes and what happened today, we had a good up move. I'm going to clear this off in a minute, but I wanted to show you that using the measuring tool in WealthCharts, the spider had dropped 12.28% in 13 days. All right, so let me just kill that thing. And we're 3% or so away from a descending trend line. So that tells me that we've got, let me kill that so I can look at the chart. Okay. So what it tells me is that we've taken out the 200-day moving average very convincingly. And so now I look at this chart, and my expectation is that we run up and test this trend line. And that's really the line in the sand that's going to help me determine whether or not this is something more, or just a short bear market rally and we go down to retest these reversal lows. Now, let's look at a few other things that I see on this chart of the different moving averages. What am I missing here? I'm missing the well signal. I'm missing the EMS signal. So we've had a big move up here. Makes me feel good. I still have some long positions. And as I've mentioned the last 2 weeks, I've been nibbling on more. But I'd love to see a wealth signal which would help to confirm. When I look at the Qs, another big bounce today, not quite retaken the 200, and they're below this trend line. The diamonds took out their 200, just like the spiders, closed above it, and they're right up on what had looked like could be some support turning into resistance. So again, the second thing I might be looking for is to take out that line of prior support and let that turn into resistance. Certainly can happen. That would be wonderful to see. If I look at the IWM, again, another big move up today, but this thing is so broken down, way below the bottom of the Darvis box. But big move off the bottom. If the bottom was around 187 and change, all the way up to 200, that's a 6 or 7% move over the course of 2 days from the bottom to the top. So is it out of the woods? No, and as I've told you many times, bear market rallies can be ferocious. Is this real or not? Time's going to tell. As I said over the weekend, not wrong to be nibbling and taking a few more long positions, but I don't know if we're out of the woods yet. If we look at the VIX, it came down the VXX and is resting on the 50-day moving average. It's not broken down yet, and it's certainly at a higher resting level than it was if we go back a little bit. So Here's what was resting before, and now it's a little bit higher. Not too much higher, but it's higher than it was. And if we look at the dollar today, the dollar gave up something. As I said over the weekend, my stocks, especially the small stocks, seem to do better on dollar weakness. So clearly an improvement over the weekend. That's why I wanted to do this. Now, other things that I look at a lot of different signals, and not all of them made their way into WealthCharts. Let me show you one that I like to look at. Now, I don't know if I can show you a website. William O'Neill would look for a move over 1% on higher volume than the prior day as a definition of a follow-through day. And that was what O'Neill would look at to see if the markets were going back into a bullish mode and time to jump in after a washout like we've had. I can tell you that I just looked at Leaderboard, which is an O'Neill product, and they are calling it a market in an uptrend, and they called out specifically the NASDAQ in its high volume day and big move today. So that's something if you want to be bullish. This is an HGSI chart, and it's got a lot of the things that I've been showing you in WealthCharts. It's got a couple of things that are unique. It's got the Hindenburg-Omen paints here, and I wouldn't expect to see a Hindenburg-Omen for any time soon because you've got to be at highs for them to fire. These are the things that I talk about as sort of giving a premonitionary warning that the market's going to roll over. And they work, and they pretty much nail this pullback here. The other thing I want to show you is the high-low jump, which I have in WealthCharts, and you can see it pretty much nailed the low within last week, and it got to the lowest extension to the downside, or greatest extension to the downside that we've had in a year. Again, that's meaning something to me. These gray lines are called the bingos, and the bingos are sort of the baby out with the bathwaters. So when you see that, you know you've pretty much washed out, but you can still get more of those, so they're interesting to me. But what I really want to show you is this green bar here. And this is called we call it a Eureka Bar. And the Eureka Bar is, I'll show you what the Eureka is. Not magic, although when Ian taught it to us, he pretty created it, so I consider it to be magic. But I'll show you what goes into Eureka. And it's a dark green, which is a very strong Eureka. So the Eureka, as you can see, when Ian taught us that when we saw this, that we should pay attention, especially if we were coming off of a low. It's sort of a mathematical follow-through day. I can calculate it on the NASDAQ or on the NYSE. I don't bother with the Amex. And so this top row here is the NASDAQ, and the bottom row is the NYSE. And you could see as this market was selling off, we saw the opposite, which is called a phoenix, which is probably the wrong name because the phoenix is something going up, coming out of the ashes. And this was during a pretty deep pullback. And one of my old neighbors and buddies, who also has a birthday in the next few days, Kathy and I, who all went out to dinner tonight, she had asked me if that meant the downtrend was over because I had taught her that when you had a big move and then the signal came in, it could be an exhaustion. And I told her we had to wait and see, that I didn't think we'd fallen enough. We fell more, but that may have been meaningful. Here's what goes into the Eureka. It's advanced decline ratio on that index today, the volume advanced decliners, and then the ARMS index. So it takes a lot for this to trigger. And if you look back to the left, you see it triggers, but it's certainly not something that triggers monthly, weekly, and certainly not daily. So if I want to put another check for the bulls, I would say that that's very meaningful. So the S&P, you can see, closed above the 200. The NASDAQ, I looked at it on the other chart within WealthCharts. I'm not going to spend much time, but I just want to pull up the Qs and look at them because they're the one that had the signal. And what I wanted to call out on the Qs was they had a pretty good volume day today, and it probably will be updated later. Let's see if I can get you the volume. Yeah, it's Monday. That's why it doesn't show me a volume. Let's see here. So the Q had 94 million shares traded today. The average day volume is 70. So not only did we have, let's see what we had on Friday, which was not an options expiration, another big day. Friday had 108. So classically, you like to see, and I guess you probably got the follow-through day on Friday with O'Neillion's, but that's big volume, much more than the 50-day average. So that's pretty impressive. But you can see it did not take out its 200-day moving average yet. If I look at my guppy charts, people know I like to look at these. They've still got the pullback and what it takes to recover. Pulled off the 250-day moving average and bounced. And we bounced on the guppy charts across all of them. I mean, again, this is what it looked like back in 2000. If I go back far enough, you'll see the same thing back in 2008, 2009. This certainly could be a recovery, and the comments about a V-shaped recovery and going back to new highs are certainly possible. But as I look at this, the spiders are back up to the top of 3% more. I think they've got to get through that before I'm a believer. The diamonds have to get through that long trend line, which was support multiple times in the past. The Qs still have a ways to go, and the Russell really is broken down. And I am going to look to see that well signal pop up. That's going to tell me everything. Now, another thing that gave me a clue today, and it was sort of an aha wow moment, was looking at the monthly high close and low close dojis, which is something that John Person made popular, developed, and teaches. And just suffice it to say that in my experience, you can sense what a market is doing by, are there more bullish or bearish of these signals? And maybe I'll talk about them in one of my intensives that I might end up doing, because it's more of a chart pattern. But when I see the monthly using today's date, bullish HCDs, January 31st, and I see 232 of them. Now, to get an HCD on a monthly chart, this means you were in a monthly downtrend. You had a doji bar, and then January, which we know is a crappy month, closed higher than the doji bar. And the doji bar would have been December or November. So that means we've had a reversal, because you wouldn't close higher than the upper, than the high of that doji bar unless you had moved up above the doji bar. So I've got 232 as of January 31st, 10 p.m. tonight on the monthly HCDs. Compare that to December, I have 53. That's a big difference. Now, more importantly, not that I have a big number there, let's look at the monthly LCDs, the bearish signals. I got five. I've said that multiple times because 232 trumps 5. And did we have a signal last month that things might be at risk? Let's look at the monthly, not the weekly. And at 12/31, we had 115. So we've had a big reversal in the monthly high and low close dojis. That makes me feel kind of excited by this market. Now, I also showed you over the weekend one of the charts I'd like to look at that incorporates, again, additional signals that I use. And yeah, those who are new to me, I use a lot of signals. But remember I talked about this plus here, and I said that was exhaustion to the downside, and we hadn't seen that in a while. Well, what did we get today? We got a rally, as I talked about over the weekend. It's too early to even comment on the futures. The futures have been moving so much in the last hour before the markets open, I'm afraid to even talk about them because it'll change so much. This is a John Person buy signal that came in today as well. Again, here's that trend line I'm concerned about on the E-minis. Here's the trend line on the Dow. The Russell has a bunch of trend lines it will have to get over to recover. So lots of resistance on these as they go higher. So is it the end of this bear market and the beginning, or this correction and a bear market in the Russell and the beginning of the next leg high? Betting man me says probably not. Probably a bear market rally, and we go back down, hopefully retest the lows and make a charge. But seasonally, February is not a bad month. In fact, let me check something real quick. Okay, so what I've done is I've gone back to WealthCharts. I've hit seasonality. And let's look at my top-down analysis. Individual ETFs, whatever I want to call them. I use this to help me figure out which way the market's going and what's going to lead. And let's just look at something simple. Let's look at how about 3 weeks? And then let's look at projected change on the top, and let's see what we have moving up. We got triple Qs. The Qs are up 6.5% in the next 3 weeks. That's very bullish. Look how the Wealth Score says they've just been performing horribly. Gas is up 4.5%. Got biotech, which has been hammered, is strong seasonally right now. Pharma, which has been hammered. Semiconductors, which would be nice to see them lead. More semiconductors. Gold, big bank or regional banks. Insurance, so financial strong. Healthcare, technology, Qs 2.24%. So I get the sense mid caps 2.19%. Where we're going to find the spiders. Spider growth 1.77, spiders 1.68. So we're going into a period. Let's look at what's bearish out of curiosity. Where seasonality is strong. And if I look at what's bearish, well, UVXY, volatility, you want that down if you're bullish. Short triple Qs, the opposite of TQQQ, down. Bonds down, that's good. Interestingly, energy producers, which have been leaders, seasonality is it's media. It's not really bad, but it's negative, as is the dollar. So seasonality is my friend. And if I go into charts and scanners and just want to look at a couple of different things here, and just to review some of the things that I find very useful, because that's the most common question I have. People have seen my sector scanner approach. I like to rank them by daily algo and then take a step back and look at them again. What am I noticing? I'm noticing that the weakest algos have the highest scores today. That probably means something. Is this rotation occurring? And is that going to bring things like technology, healthcare back into leadership? Certainly is possible. If I look over the weekly algos and rank them, you could see energy's up at the top. If you come on down here, again, you see weekly change on technology, 2%. It'll be interesting to see how this moves over time. But when I start to see healthcare and technology and even cyclicals and consumer defensive, that's interesting, all with really big moves, I start to wonder if we're seeing rotation here. Hit the compare. Let's just look at the daily change this time instead of looking at daily algo, education and training, solar, beverages, internet retail, internet content, auto, semis, data, pharma, electric gaming, semis. Let's go to compare, and then we can start to take a look at what stocks really had big moves today. And there were some stocks here. Many of them have been beaten up. New is probably a China education stock that got destroyed when they changed some of the rules, but had both a WealthScanner and an EMS. I don't play $1.80 stocks, so probably wouldn't play that. Default watch list, we can review. Okay, just checking my settings here. Don't know ARVL, a rival group, cheap stock, had a big move. Ride, that's Lordstown. This is one that's had a lot of negativity because it was, I think, they put a truck on the mountain and let gravity pull it down and said that they had a working model. So we had junk. That's what I'm seeing here, junk with big moves off the bottom. Now, whether that is something that's good or bad, I suppose most of us that buy things that are not junk probably didn't own a lot of this. JMIA, Asian online retailer, big move up here. Yeah, some of these might actually start working. So I see a junk off the bottom day today when I look at that. So that's one thing I like to look at. Wealth Finder, actually, let's go to WealthScanner here. We want to look at the at the NASDAQ 100. You know, the Q's had such a big day. Is there anything that's going to come to the top here with really strong strength? We got Vertex Pharmaceuticals. Well, that's interesting. It's had a big run up, but as you can see here, it's come down from 303 down almost about a 50% move. We saw pharma with good seasonality. This one's breaking out today. Vertex Pharmaceutical, PACCAR, manufacturer of, I think, commercial vehicles. Exelon, isn't this a utility? That's kind of funny that it made the list, got an EMS signal and everything. So I might look at what some of the bullish findings are on WealthScanner, because as I've learned from Rob, these are the stocks that have a tendency to lead with breakouts, especially if the market's turning. If I want to pull down here the S&P 500, broaden my list, you can see what else pops up. Progressive Insurance, one that would benefit from rising rates. Halliburton, an oil services play. Sealed air and industrial play. You can do this yourself, but you can start to find things that you might want to be looking at, especially if you believe the market is taking another run up. I mean, just to be clear, I personally think the market is going to have another couple days to the upside, and I'm saying that despite the fact if I look at the futures right now, and I see the futures are down 37 points on the NASDAQ, 12 or 13 on the S&P, 75 on the Dow. Gold's up a bit, oil's up a bit. But as I said, the future's been so volatile. So that's my take on the market. And then let's just look here, spiders versus gold. If the market's going higher, spiders are going higher versus gold. And we can see that on the hourly chart, a very strong move. And on the weekly chart, we can see that after, from the peak on December 31st to, frankly, the low of the market here, January 25th, the reversal low occurred on January 24th. The spider versus gold has gone straight up. Here's a spider versus bonds, the hourly. Let's look at the daily. And again, the same thing. From January 4th to the low of the market, here's the 27th, so it took a couple more days. Big move up for the spider versus TLT. What else do I see? Spider versus Fang on the daily chart. When it's starting to head to the lower right-hand corner, even though the spider is strong, Fang is starting to work. And if I come down here and I look at the spider versus the IBD 50s, the smaller cap growth, not exactly seeing that yet. So I'll be looking for that to happen. We'll look at this in a second. The ARC stocks versus the Qs. Obviously, when you're down here in this lower right-hand corner, the one on top sucks, and the one on the bottom is outperforming. But the one on the top is showing a little bit of strength over the last several hours. So it will be very interesting to see. If I look at the hourly on the sectors, does anything stand out to me? Take a second to write because I've got many programs running, as you've seen in the few minutes I've done this. Materials still down. Communications moving up, think Facebook. Energy, which has been leading, has pulled back a little bit. Financials have pulled back a little bit in strength versus the spider. Industrials have pulled back a lot. Look at technology turning around, leading up. Staples, like some of the beginning ones, has turned down. Real estate's turned up. Utilities has turned up, which is somewhat baffling to me if the market's making a big recovery led by technology and some of the others that we're going to mention, communications, then why is our utilities, which are defensive, moving up? Healthcare hasn't done much, but discretionary also seems to be leading. Now, if you wonder why everybody gets so excited by technology, you see the sell-off from the middle of December to the market lows. When I look at long-term on the sectors, and you have to pick which one, these are all normalized by comparing to the SPY and the ratio charts, which are so cool in WealthCharts and so easy to do. The one that's up here in the upper right-hand corner, the one that's got the best strength, the ones are technology and healthcare, technology and discretionary, think Amazon, think Shopify, are the ones that are leading this market higher historically. They've all suffered a bit in the January pullback. Maybe they lead going forward. Lastly, don't even know if this is going to work or show us anything because I'm looking at so few things. I want to go back to seasonality. I think people who follow me for any length of time know, did I kill the seasonality by playing around? Oh, it's right here. Know how much I like seasonality. Let's just drop the sectors in and see if we see anything. Don't know if they'll show me seasonality, but I'm just curious. If nothing else, it'll show me their activity over the next couple of months. Well, first thing, over the next 3 weeks, every SPY sector seasonality is positive, led by technology, healthcare, industrials, financials. Technology and healthcare. Boy, what will the spider do if these weaklings, which have been lagging, turn around? So I'm going to stop it right now. Notice I did not go into individual stocks. I did a lot of that over the weekend. I also showed you how to define stocks in the sector scanner and the WealthScanner this evening. Lots of questions about when my CAT scanner will be available. I can tell you from my perspective, not soon enough, but I can also tell you that I'm kind of glad I took Rob Hoffman's suggestion, and we decided that we were going to not release it at the time of the Wealth 365 event, but rather we were going to sit back and let me play with it and see what I could come up with, and see if I, I'll be honest, see if I can break it, basically. And I've been busting my butt using this, trying to break it. But boy, I love this. Look at how many, and these are a list that I'm going to do on a weekly basis once, and I'll talk a little bit about what some of my thoughts are about that before I say goodbye. But these are some of the best in the market that I accumulated, the list that I work off of. When you look through, you'll see the leaders of the market, but the list has less than 500 stocks in it. Look at how many of them have my bullish EMS today. Holy Toledo. I think that's another sign that this is something to pay attention to. So back to the CAT scanner and the other indicators, I hope to have them out with Rob's blessing in the next 2 weeks. When we launch them, there will probably be a joint educational program with Dr. Wade with his seasonality tools and my CAT scanner and workplace or marketplace indicators. And we'll introduce them with the price. And I've had a lot of requests for, hey, Jeff, I like your ratio charts. Can you give this to me? Absolutely. At that meeting, I'm going to show you how you can share layouts. I will share everything I have with you in WealthCharts. Here's the big exception, right? If I was to share you something like Rob's TRP tools, and again, this has got another system that I like to use, and I'll show you why I like to use it. He'll show you why when he does TRP courses. Well, you really can't use this unless you bought this package from him. So if I sent you a layout with TRP in it, you'll be very unhappy with me because you won't be able to install it because it'll say you're not entitled to it. So I've got to clean that up and have them so they're not using a broker as a data feed or anything like that. But most of the things I have in here, whether they're my watch list or my layouts, I'll be free to share. and we'll talk about that as we go forward. So thanks for listening. You know, I did this in a half hour. I'd rather do a weekday update in 5 minutes or 10 minutes, and I plan on working to do that. I was just excited today, and I wanted to show you the Eureka. I wanted to show you where we are in the chart patterns. You got to, make your own game plan. My guess is we still go higher here, but there's a lot of resistance before I'm willing to accept that this pullback is over. It might be, could be, but I will let the data show me. Data dependent, just like the Fed. Have a great Tuesday. Bye.